talk about what the future of global trade would really look like and how these tariffs will affect oil marketing companies. We have Somit here who joins us with an analysis.
Well, yes, oil marketing companies remain in focus. There's a potential double dhamaka for them given the fact that oil prices have come down to around $71 per barrel level, which is the lowest that we are seeing in 2025, while gross refining margin or the Singapore gross refining margin, which is the Asian benchmark, have climbed to nearly $5.4 per barrel, again the highest level that we are seeing since 2025. Now, higher GRMs and lower crude prices benefit oil marketing companies on earnings point of view, but do remember that actual financial benefit will only be realized if current prices remain at the current level for a longer period of time. Now, for refining margin, on the refining side, if you look at every $1 per barrel rise in the gross refining margin benefits MRPL's EBITDA by nearly 1,000 odd crore rupees. It increases Chennai Petroleum's EPS by around 30%. For Indian Oil Corporation, BPCL and HPCL, their EPS goes up by nearly 14 to 16%, and for Reliance Industries, the consolidated earnings increases by around 4 to 5%. But then again, for actual benefits to realize, Singapore gross refining margins need to remain at the current levels for a longish period of time. Now, when it comes to a marketing side, lower oil prices boost the gross marketing margin that the oil marketing company earns on selling every liter of petrol and diesel. Now, current fuel refining marketing margins, if you look at, is at around 9 rupees per liter for petrol and 7 rupees per liter at diesel, which is at a multi-quarter high for both the retail fuels. Now, every 0.5 rupees per liter increase in the gross marketing margin benefits Indian Oil Corporation's EBITDA by nearly 7%. For BPCL, it increases their EBITDA by nearly 8%, and for HPCL, the delta is much higher at around 11%. So keep an eye out for oil marketing companies given the fact that GRMs have risen to 2025 high levels and crude prices are at 2025 low, and both these factors could boost their earnings if the prices remain at current level for a longish period of time.
Thanks so much for that, Somit. Kush, let me come to you. Take a quick view because all of these are buzzing in trade today. HPCL now up nearly 6%, IOCL up 3%, BPCL up nearly 3% as well. Is there a trade here?
Avoid all three of them. The price action is far more attractive than the volume action. Even on the way down, after being beaten down for such a big magnitude and for such a long time, day before yesterday when these stocks were down, the volumes were significantly higher than they are today on the way up. I don't think averages matter right now. Even then, all of these are trading below their key averages. But as I said, it's not a volume-backed move. The price move right now is just more, glaring than the volume action move. As in when the volume picks up, perhaps it might turn attractive. At the moment, I wouldn't really go long on any of these things.
Cautious, at least on this trade. That's Kush's view. But it's slipped into a very short break. Of course, much more on the other side to talk about because there are plenty of moving parts in the market. We'd like to cover some of those, so stay tuned.